Hey guys, today I wanted to speak to you about how your tax returns can negatively affect your possibility of being approved for a home mortgage, being that it is tax time. Typically in the marketplace, you're either a W-2 employee or you are self-employed, meaning you are 25% or more owner of a company. W-2 borrowers, you have it really easy. Typically, most of the documentation that would be required from a W-2 borrower is W-2 from the most recent tax filing year, most recent 30 days of pay stubs, a copy of your driver's license, and any type of bank statements or asset statements showing your cash to close. It can get a little more complex if a family member is giving you a gift to help you purchase a home. We can help walk you through that process and source that gift. Again, pretty easy. When it comes to self-employed borrowers, it gets a little more complex and tricky. Underwriters consider a self-employed individual one who owns 25% or more of a company. You could be W-2'd with the company that you work for. If you own 25% or more of that company, underwriters are going to consider you self-employed. So the documentation gets a little more complex, meaning the minimum requirements would be the most recent 2 years of filed tax returns, personal and business, with all pages and schedules. In some cases, a profit and loss statement for the most recent tax year if you haven't filed. And in most cases, 3 to 6 months of business bank statements are required on top of personal bank statements to show cash flow in the company. The reason the tax filing can be critical to your approval is, even though you might be a W-2 of a company that you own 25% or more, if that company shows a major loss, then that could negatively affect you being approved for a mortgage. So an adjusted gross income comes into play with sole proprietors, such as real estate agents or home decorators, people that work on their own but file a Schedule C. Keep in mind that all of the expenses are going to be taken into consideration when it comes to analyzing your income. So even though you might have grossed a certain amount, that amount's going to drop with the amount of expenses that you report. So keep that in mind. It's always good to consult with an experienced lender if you're a self-employed borrower. My team and I have 35 plus years of experience in this industry. We're great at what we do. We try to analyze the income before we issue pre-approval letters so that you know that you're qualified. The listing agent and the seller of the property you're hoping to purchase have a pre-approval letter from a reputable lender, and they know that you're qualified. So as always, contact myself or my team. We are glad to help and walk you through the process, and we hope to hear from you soon.